Welcome back to the channel, and thank you for joining me. I'm Algabot, your guide to the world of automated trading systems. Today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Vertical Horizontal Filter Breakout. This strategy blends two classic ideas, a price channel breakout and a trend strength filter known as the Vertical Horizontal Filter. Over the next several minutes, you'll learn how it decides when a market is genuinely trending, how it enters both long and short positions, and how it manages risk on every trade. Everything here is for education only, so let's dive in. So what does this expert advisor actually do? At its heart, Vertical Horizontal Filter Breakout is a trend-following breakout system. It watches a price channel built from the highest highs and lowest lows over a recent window, often called a Donchian channel, and it looks for the moment price closes decisively beyond that channel. But here's the important part. A raw breakout, on its own, can be unreliable. In a choppy, sideways market, price often pokes past the edge of a range and then snaps right back. Those false breaks are one of the biggest challenges a breakout trader faces. That's where the vertical horizontal filter comes in. The vertical horizontal filter, or VhF, is an indicator that measures how strongly a market is trending versus how much it's simply chopping back and forth. It compares the net distance price has traveled to the total path it took to get there. When those two are close, the market is moving in a clear direction. When the path is long but the net move is small, the market is ranging. The strategy only arms a breakout when this filter says a trend is present and getting stronger. This expert advisor is designed with trending foreign exchange majors and index markets in mind, on time frames from intraday all the way up to swing trading. It runs on a single time frame, whichever one you attach it to. It handles both long and short trades symmetrically, uses the average true range to size its stops and targets, and can trail its stop to let a strong trend run. It's best suited, in an educational sense, to traders who are patient and comfortable waiting for confirmation rather than chasing every move. Remember, trading always involves risk, and losses are a normal part of any approach. Let's walk through the exact logic, step by step. The strategy evaluates its rules only when a bar has fully closed, so it never acts on a half-formed, repainting candle. That's an important detail for reliability. The first step is the regime gate. On each newly closed bar, the strategy calculates the vertical horizontal filter over a lookback of 28 bars by default. It then checks two things. First, is the filter at or above the trend threshold, which defaults to 0.35. And second, is the filter rising? That is its current value greater than it was 3 bars ago? Only when both are true does the strategy consider the market to be trending and strengthening. If the filter is below the threshold, or if it's fading, the strategy stays on the sidelines and takes no new trade. The second step is the breakout itself. The strategy builds a channel from the bars before the signal bar, taking the highest high and the lowest low over the channel period, which defaults to 20 bars. It then adds a small buffer, equal to a fraction of the average true range, beyond each edge. If the just closed bar closes above the upper channel plus that buffer, the strategy signals a long. If it closes below the lower channel minus the buffer, it signals a short. That buffer helps filter out marginal breaks that barely clear the line. Now, entries only happen when the regime gate agrees. So a long requires both a trending, rising filter and an upward breakout. A short requires the same trend confirmation and a downward breakout. The two sides are completely symmetric. Risk management is built in from the moment a trade opens. The stop loss is placed at 2 times the average true range away from entry, and the take profit at 4 times the average true range. That's a reward to risk ratio of 2 to 1 by default. On top of that, there's an optional average true range trailing stop, set at 2.5 times the range, which only ever moves the stop in the trade's favor, never against it. This lets a strong trend keep running while protecting open gains. Finally, the strategy handles reversals. If an opposite breakout appears while a position is open, say a downward break while a long trade is running, the strategy closes that position, reading the move as a shift in regime. Only one position per market is held at a time. Now let's look at the actual MetaTrader 5 code that makes this work, just as you'd see it in the meta editor. At the top are the input parameters. VhfTrendThreshold, set to 28, controls the lookback for the vertical horizontal filter. VHF trend threshold at 0.35 is the minimum filter value that counts as trending. VHF slope bars at 3 defines how far back we look to confirm the filter is rising. Channel period at 20 is the Donchian channel lookback, and breakout ATR buffer at 0.10 is the confirmation buffer as a fraction of the average true range. ATR period is 14, and the stop and target multipliers are 2 and 4. Below the inputs, you can see the core decision. The variable named trending is true only when the current filter value is at or above the threshold and greater than its earlier value. Then long break is true when the just closed bars close is above the upper channel plus the buffer, and short break is true when the close is below the lower channel minus the buffer. Look at the long block. When trending and long break are both true, the code reads the ask price, sets the stop loss at the entry minus the stop multiplier times the average true range, sets the take profit at the entry plus the target multiplier times the range, and calls trade.buy. The short block is the mirror image. When trending and short break are both true, it reads the bid price, places the stop above the entry, the target below it, and calls trade.sell. Both sides use the same average true range distances, so risk is handled consistently whether the trade is long or short. Let's bring this to life on a chart. On screen, you can see a series of candles, with the price channel drawn over them, and below, in its own panel, the vertical horizontal filter, with its trend threshold marked as a dashed line at 0.35. We begin on the left, in a quiet, sideways stretch. Look at the first few candles. They overlap, they push up and then slip back, and price is drifting inside a narrow range. Now look down at the filter panel. During this stretch, the vertical horizontal filter is sitting low, while beneath the 0.35 threshold, down in the region marked choppy. That low reading is the indicator telling us the market is going nowhere. The path price is taking as long, but the net move is small. The strategy reads this and stays flat. No trade. This is exactly the kind of environment where naive breakouts get chopped up, and the filter is deliberately keeping us out. Then something changes. As we move to the fifth candle in the sequence, price presses firmly against the top of the channel, and this candle closes above the upper channel line, clearing it by the small buffer the strategy requires. At that very same moment, watch the filter. It has climbed above the 0.35 threshold into the trending zone, and it's rising compared to a few bars earlier. Both conditions now agree, a genuine, strengthening trend and an upward break. That's the buy entry marker you see on the chart. The strategy goes long. Notice where the protective stop sits, just below the entry, at 2 times the average true range. And the take profit target sits farther above, at 4 times the range. That 2-to-1 reward to risk shape is built into every trade. Now watch the trend do its work. The next candles push higher, one after another, each closing near its high. The filter panel stays elevated, confirming the move has real direction behind it. Price carries up to the take profit target, and the long trade completes its journey. Had the move stalled early, the trailing stop would have stepped in to protect the position, but here the trend ran cleanly to target. After that peak, the picture shifts. Price rolls over and the next several candles turn indecisive, small bodies. Overlapping ranges, no follow-through. Look again at the filter. It drops back down, sinking below the 0.35 line and into the choppy zone. The market has cooled from a clean trend into chop, and once more the strategy waits. It does not try to short into that indecision, because the trend filter simply isn't giving permission. Patience pays off in the illustration. As we reach the later candles, price begins to press against the bottom of the channel. Then one candle closes decisively below the lower channel line, clearing it by the buffer to the downside. And right on cue, the filter has climbed back above the 0.35 threshold and is rising again, a fresh trend, this time pointing down. Both conditions align, and that's the sell entry marker on the chart. The strategy goes short. Just like before, risk is defined from the start. The stop sits just above the entry at 2 times the average true range, and the take profit target sits below at 4 times the range, the same 2-to-1 structure, mirrored for a short. From there, the down move develops. Each following candle makes a fresh low, closing near its bottom, while the filter stays firm to confirm the trend has momentum. Price slides down into the take-profit target, and the short trade completes. So across this single illustration, you've seen the whole idea in action. The filter kept the strategy out of two choppy stretches, then gave a green light for one long and one short, each taken only when a real breakout lined up with a strengthening trend, and each managed with a defined stop and a defined target. That combination, trend confirmation first and breakout second, is the entire philosophy of this expert advisor. And that brings us to the end of our look at the Vertical Horizontal Filter Breakout Expert Advisor. Today we covered how the vertical horizontal filter separates trending markets from choppy ones, how the strategy combines that filter with a channel breakout to enter both long and short, and how it manages every trade with average true range stops, targets, and an optional trailing stop. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. All trading carries risk, and losses do happen. If you found this analysis helpful, please like the video, leave a comment with strategies you'd like me to break down next, and subscribe for more MetaTrader 5 strategy analyses. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.